we in the Western world are growing. We're not in recession, but our growth is actually not as good as it could have been and nowhere near as good as in Asia.
So, Robin, it's common misconception that the US is the top performing economy.
Yeah.
Can you paint us the real picture here?
Yes, it's the biggest economy, but it's actually growing at what they call subpar growth. And this actually gets reflected in the stock market indices as well. So although the American stock market indices are at a new all-time high and they feel they're doing jolly well, when you compare them with other markets around the world, you realize they come out very low down the list. What most Americans don't know is they should have liquidated their entire portfolio back in the year 2000. And if they put their money into China instead, they would be 800% better off than they are. If they put it into India, they'd be about 400% better off. On the chart, the market right down at the bottom of the screen, which is going up, is the American market. And then the very volatile one is China, and then India. So, Asia is where the growth has really been and will continue to be. So that's the market you should have been in all along, really.
And China is this greenish-grey line at the top, with India at the pink.
Yes.
And then we see the US and the S&P 500 in orange, and Germany.
And the green is Germany, which is one of the best European markets, obviously. So, I mean, we in the Western world are growing. We're not in recession, but our growth is actually not as good as it could have been and nowhere near as good as in Asia.
Now, we know FANG is partially propping up the US economy, but how much are they really contributing?
Well, it's quite incredible the extent to which a very few companies are holding up the entire index. On this chart, the orange line is the S&P 500 index, which is weighted by market capitalization. So a few giant stocks hold it up. And you can see it's going up almost in a straight line with almost no volatility. So there's no reason to sell, chart-wise, to sell that index. However, if you weighted the same stocks that are in the index by equal weighting as many other world markets would be, you get the green line, and you can see actually it hit a peak in 2014, rolled sideways, and is now actually in a bear market. So we're very fragile it's like thin ice. It's 7 or 8 stocks holding the whole thing up. And if anyone wanted to sell one of those few stocks, they could crash the whole thing down. It is vulnerable to an enormous extent.
Wow, very serious.
Yeah.
Now, China is the real winner here.
Yeah.
Why should people be investing in China?
Well, it is true that historically the Chinese economy grew at about 15% per annum. Those days are gone. It is now much too big to do that. But it's still growing at about 5.5% to 6% right now, when we in the West consider we're doing jolly well at 3%, or in England rather less than that. So and in the case of India, India started to grow rather later than China, so it's in sort of catch-up mode. And now that it has, as a Prime Minister, Mr. Modi, it is in a very dynamic mode. And this has again been reflected in the stock market. So on our work, when we rank the trends of asset classes in descending order of merit, China and India are right up at the top of the list. Important thing, the yellow band on this chart is the world index. So if you can't beat a passive holding of the world index, you're taking too much risk for too little return. And you can see that the UK and indeed the American markets are going up, but they're slower than the world growth. Very particularly for the European investor, notice that Euro cash is right next to the US stock market. There is absolutely no reason for a European investor to buy America at all. You'd be better off just sitting on your own cash. So if you, in global asset allocation, a European investor would be selling out of the American market and moving more weight into Asian markets and emerging markets that go with India and China.
Now, going back to China, is it too late? Have we already missed that golden opportunity?
No is the answer. We've missed the period when it grew at super rates of growth. And now it is, in many industries, like the motor car industry, it's already the biggest such industry in the world. And I think in our lifetime, we will see it become the biggest total economy in the world. It will overtake America. And about 40 years after that, India will catch up and also be number one. So we don't expect it to grow at much faster than 6% per annum. But when a thing the size of China grows at 6% per annum, that's an awful lot of growth. And mercifully, quite a lot of our businesses have a big piece of that action. So we can participate in that by sometimes buying our own companies who have seen this growth trend. One of the things China is doing is building the biggest single infrastructure project the planet's ever seen. You will be able to see this from space. You can't see the Great Wall of China from space, but the new Silk Road, as it's called, it's a superhighway, railway road, fiber optic cable, everything, right across from China into Germany. It goes through 65 countries, and it's just enormous. And investing and participating in that growth will look after the next decade for us. I think it's going to be unstoppable.
Well, thank you so much, Robin Griffiths, for joining us in the studio today. It's been a pleasure.
Thank you.
And thank you at home for watching. Don't forget to click back to Dukascopy TV for more interviews like this. I'm Kaz Kahil. Goodbye for now.